Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 23rd, 2025, and we're diving into the first quarter earnings report of Manhattan Associates, a leader in supply chain and omni-channel commerce solutions. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Manhattan Associates has certainly delivered an interesting report this quarter, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Manhattan Associates reported a total revenue of $262.8 million for Q1 2025, which is an increase from $254.6 million in Q1 2024. John, can you walk us through the key drivers behind this growth?
Absolutely. The growth was primarily driven by a significant increase in cloud subscription revenue, which rose to $94.3 million from $78 million last year. Additionally, license revenue saw a substantial jump to $9.3 million from $2.8 million. These figures highlight the company's successful transition towards cloud-based solutions and its ability to capture new market opportunities.
And what about profitability? How did they perform in terms of earnings per share?
Manhattan Associates reported an adjusted EPS of $1.09, which is a strong beat against the forecasted 70 cents by analysts. This impressive performance underscores the company's operational efficiencies and effective cost management strategies.
Operational efficiencies and future outlook. John, let's delve into the operational side. Manhattan Associates reported a GAAP operating income of $63.2 million and an adjusted operating income of $91.3 million. What does this tell us about their operational efficiency?
These figures indicate that Manhattan Associates is operating with high efficiency. The adjusted operating income reflects the company's ability to manage costs effectively, excluding non-recurring expenses like equity-based compensation and restructuring costs. Additionally, their cash flow from operations increased to $75.3 million, showcasing strong cash generation capabilities.
They also repurchased $100 million worth of shares. How does this impact their financial strategy?
The share repurchase program is a positive signal to investors, indicating confidence in the company's future prospects. It also helps in enhancing shareholder value by reducing the number of outstanding shares, thereby increasing EPS.
CEO insights and strategic positioning. Eric Clark, the CEO of Manhattan Associates, mentioned that the company is off to a solid start in 2025. What insights did he provide about their strategic positioning?
Eric Clark emphasized the strength of their unified cloud portfolio, which offers best-in-class functionality. He highlighted that Manhattan is the only cloud provider recognized as a leader across the supply chain commerce ecosystem. This positions them well for success across a broad set of industries with a large and growing addressable market.
How does this strategic positioning affect their long-term growth prospects?
With a robust cloud offering and recognition as an industry leader, Manhattan Associates is well positioned to capitalize on emerging opportunities in the supply chain and commerce sectors. This strategic positioning is likely to drive sustainable long-term growth.
Key takeaways. In summary, Manhattan Associates has delivered a strong first quarter with impressive revenue growth and profitability. Their strategic focus on cloud solutions and operational efficiencies has paid off, as reflected in their financial performance. John, any final thoughts on their investment prospects?
Manhattan Associates is well positioned for continued growth, given their strong market position and strategic initiatives. Investors should keep an eye on their ability to maintain this momentum and capitalize on new opportunities in the evolving supply chain landscape.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Manhattan Associates' performance in the comments below.